Well, Dodla Dairy, as promised, is the next management on our show. The company reported a decent set of numbers in quarter three. Stock has been a big outperformer in the last 1 year or so. If you pull up a chart, you'll see it's doubled in the last 1 year. Well, recently, its board approved a capex of roughly around 10-12 crores odd. But to understand what's the trajectory going ahead, Mr. Sunil Reddy Dodla, the MD of Dodla Dairy, joins us on the show. Hi, Mr. Dodla. Good morning, and thanks so much for joining in. Well, Amul has completed their 50 years. And they are stating that they want to hold on to their market share and be aggressive. And it's not a profit-making organization, right? There's not so much focus on profit. I recall when you chatted with us the last time around, you told us that in your markets, you have close to 7.5% market share. How do you compete in this sort of a challenging environment?
Good morning, Nigel. Thank you for getting me on your show. Mostly what happens is this competition has been something which we have been facing and fighting for the last 20 years or so. With the cooperatives on the one side, which are, they also go for profit, but the profit is distributed only to the farmer side and they look at the consumer as one. And for us, we also have to make financial profit. We do have our own set of market, which is around 30-35% of the markets are based for us. What we call them as our experimentals who have a preference for certain kind of milk products and they prefer to pick up. For example, they will pick up a company product for curd and maybe a company product for milk. And that's what we've been fighting for. Amul will have their segment. We will have our own segment. But more importantly, we're beginning to see a consolidation happening among companies. So I think that is where it's going to lead to. As much as Amul is going to be aggressively fighting for its market share, we will be fighting for our market share. And the consolidation will happen now that the smaller players will be weeded out.
Okay, the smaller players will be weeded out. Got it. Mr. Reddy, good morning and thanks for joining in. Can you help us with the metrics of the dairy industry currently? How is, the gross margins, the procurement prices, demand situation, and what's the outlook that you're looking at for the next 12 to 18 months?
Morning, Sonia. The outlook for the next 12 to 18 months, profits will be strong because the first quarter that we are looking at, what is the summer quarter, which is a good season for us. Compared to last year, this year our procurement prices are still lower. We're still getting good amount of milk coming into the system. We will be looking at good amount of profitability. Coming to growth in terms of the revenue growth will also be strong in terms of whatever we've been carrying on in the past year will continue going forward. Volume is something which we'll have to wait and watch because most of us had taken the pack sizes had come down to keep the prices stable in the earlier years. Now we'll have to wait and watch and see if we can increase the pack sizes to give the customers some relief in terms of the inflation that we had on the price of the product going up. If procurement prices continue to remain low, inventory buildups do happen. I think we will be passing on the benefit of additional profit to the consumers and we will maintain the same profit levels that we have been maintaining now.
Oh, that's interesting. So you'll maintain this 12 to 15% growth rate in Q4 as well, or would you want to scale it up? And for FY25, what are we looking at?
We will maintain the revenue growth of the 10 to 12%, Sonia, and FY25 also we'll be looking at the same growth rate of 12 to 12% in terms of revenue, because we also have other divisions that are kicking in. For example, our cattle feed division is kicking in a lot more. So milk on milk, we can look at the 10 to 12% growth rate, yes.
Okay.
Mr. Reddy, hi, good morning. Sorry, this is not so much a question about the company itself, right? But there was a news report which came yesterday, I think, which said that the Maharashtra FDA has actually sort of cracked down on one of the fast food outlets for using cheese substitutes. I think it's called analogous cheese, right? Yeah. Could you just explain this issue? And is this because value-added products in the dairy industry is a big growth area. That's where the margins are. Ghee, paneer, cheese, etc. Just wanted to understand this from you, sir.
So basically, analog cheese is nothing but replacement of milk fat with oils like a palm oil and to make become cheaper for the HoReCa sector or the consumer who prefers it. It will be more of labeling issues that we will face as we go forward. Basically, the dairy products in the country as of now are simple, clean dairy products. There is no additions. FSSAI keeps it plain and simple. When we go forward, as the country's economic growth is coming in, people are looking at various kinds of products. For example, higher protein, whether it's going to be only milk protein or added proteins that come into the play, will be where the challenge will come in value-added products. because to create a higher value product with a higher margin, there is a lot of possibility of product R&D coming in by using replacements for more expensive ingredients. And I think customers have to be aware of the labeling and read the label before they consume it. That is going to be the most important thing that has to happen, because government laws are very rigid in terms of labeling. But after that, the customers have to be aware of what they read on the label before they consume.
Okay.
No, from a dairy company, for the industry perspective, is there any, the issue seems to be about labeling, as you said, but from an industry perspective, is there any impact at all?
Yeah, we are getting alternatives coming in, right? So we have to make sure our communication to the consumer that we are better than the alternatives, and therefore that communication has to improve from the company side.
Okay.
All right.
For
Mr.
example,
Dodla,
you're
you-
using analog cheese versus regular cheese. How do I tell a consumer what the difference is?
No, because I mean, the consumer who's going to these outlets would prefer, I mean, when it's cheese, they prefer cheese, right? And so that's the labeling issue that you're talking about as well. But in a way, this perhaps means greater competition, or is it? Because the alternatives would be cheaper, and that's why they're being used.
So, but that's where the value addition comes in. Like, if you remember the ice cream war that happened, where we started saying, if you don't use milk products, Amul had gone to court and won at court, which said that you can't label ice cream if you're not using milk, and you'll have to call it frozen dessert. So now it's up to the consumer. Will he prefer a cheaper frozen dessert, or will he want a more expensive ice cream? And I think consumers will get to the more expensive ice cream.
Okay, all right. Let's focus on another aspect then. A small part of the business, which is animal feed, but is growing. I think you mentioned the last time around that, capacity has gone up, I think 3 times, if I'm not mistaken. And you said that in the coming year, you'll see a far larger contribution coming from animal feed. I think right now it's just around 3% approximately. So could you tell us by FY25, what should you end at? I think this year you'll end closer to around, say, 80, 90 crores maybe. And on that, you're expecting to grow another 100 crores. So for the next year, you'll be closer to around 200 crores?
Yes, sir. Yes, Nejal, it will be 200 or a little more than 200 crores, because earlier we had a 2,000 ton capacity per month. Now we have expanded it to 12,000 ton capacity per month. And I'm very confident that we'll do at least that.
So 200 crores, and what would be the utilization levels? I mean, how do you see this scaling up from there? It's still going to be a small part of your business, but tremendous growth potential, right?
Precisely, Nejal. So I think we were earlier planning to get to our 12,000 ton capacity utilization over a period of 3 to 4 years. But I think right now, the way things are panning out, we should be able to reach almost 80% capacity utilization in the first 2.5 years itself.
Okay, all right. We'll leave it at that, sir. Thanks a lot for joining in and appreciate your time here on CNBC TV 18. That's Dodla Dairy and the way forward for the business.